All right. Good morning, traders. Whoops. I don't know why that happens. There we go. Hello, Renee. Good to see you. Good morning, Doug. Good morning, Mike. Good morning, Kent. Good morning, Peter. You can see in here. Beautiful. Thank you. Sandy. Oh, Sandy. Sandy, your message came in directly to me, not to the group, just so you're aware. If you want to change where your message outputs are. Good morning, Bob C. Bit Boss. Good morning to you. Sorry, I'm trying to resize my chat panel so I can see everybody. Okay. Good morning, FPE. Great crew, great energy. Officially, good morning, everyone. Welcome out to the Options Income Launchpad Wednesday Market Midpoint. It's been a bit of a whirlwind. It's our posture decreased again. Interestingly, for the last 3 years that our group has existed and formally kept posture, the lowest it's ever been in that 3 year period of time, minus 2.75. And we got there last year in April around tariff reveal party day. And right as we got to the bottom, it recovered pretty quickly. So when we're gonna go take a look at the corollaries here. Now the hard thing is so many more moving parts now than then, right? Um, we've got uh we've got still like the straight open, but who knows when that how tenuous that is. Ceasefire for 2 weeks between two countries, while Iran and Israel still exchange missiles. Theoretically, it could get to minus 10. Whew. I think we'd be concerned about a lot more than our trading if somehow it was there. Anyways, all right, Market Midpoint. I'm Scott. I'm your host. Everything we do is educational and illustrative only. No recommendations to buy or sell anything. We're not brokers or advisors, so nothing is considered personalized investment advice. Any decision made based on anything you see or hear from us should be done so at your own risk. Yada, yada, yada. Good morning to you, Victor. We know the agenda. We're going to go in and look at things and go from there. So let's hit it. And there's the difficulty of our next decisions. Is the SPY just gapped up 2.5%? We see it, bam. Yesterday we said, hey, everything in me is saying this is looking like it's due for another drop as the buyers ran out of steam. And then what? Then we had this binary event. It was like earnings for the entire market. Something was going to happen. Something was going to be announced. Morning, Stephen D. Whether it was announced by some sort of attack, um, announced via social media declaration, and then acceptance via a separate social media declaration on a separate channel. Okay, fair enough. And we said, that whatever our analysis is changes that quickly, and then you have to adapt. I said I could see it being up 1.5%, 2%, down 3 or 4 if it was the if it was the opposite. So that's the hard thing about yesterday was you're either now if you're holding trades, that makes sense. But if you're looking at it yesterday and you're saying, okay, I'm going to put a call on today, it would be a pure guess. I mean, it would, right? Like you're saying, I'm convinced my ability to say that this is going to definitely be. I don't know. It's because if that's the positive there. The negative could have been there where it opens and you're kind of in the same spot either way. Um, and typically the big move is going to do two things. It's going to justify any bullish trades that you may still have on. Right, we still have a bullish trade ASX that we said, hey, this thing is still, it never broke support. It's gone a little sideways, but it's make it tried. I the last I checked, there was several people who had pieces of that still. Ken says I still have unexpired calls going, and this is where we get recovery on those. So that's the first thing is it does is it's going to any bullish trades that you're in that you've been kind of hanging on are going to benefit, and then it's going to stress any bearish trades that you might have on. Steven has ASX. Yeah, Renee's still in it, as I expected. Let's pop over there. Nice move up there. It never broke. Right, never really broke. This level maintained. It held, and then it sat in here, and now it's up here, and we're thinking, okay, maybe we might actually get the rest of this move. Great. Getting rewarded for that. Yeah. Okay. So the question then is, now what? And you can see here, I've got my aggregate on. See, if you were at the session last night, I turned on the overnight. Usually I have this aggregated, so basically it just sort of closes these big gray chunks down because for the most part they're not that helpful. At least they're not to me. So if you ever are looking at your intraday chart and you're like, Scott, yours is cleaner than mine, I'm sacrificing all that overnight data somewhere. I'm going to start aggregations at market open on this axis. And I say, okay. And now that disappears and I just have the gap. Because that's what happened. It gapped up today. We saw it gap up and now we can see it's pulling back. This is a tough one. If we jumped up 1.5%, I think, oh yeah, this thing could still have legs. 2.5 on the gap is tough. Now I'm wondering, like, how much follow through are we gonna have? Let's go through and look at. Let's look at a couple other things. Let's look at the VIX. Let's look at the VIX and let's go back to. Yes. Okay. So this was interesting. It, I mean, it technically turned by the end of yesterday and was giving a higher low signal. this is going to be an interesting one for us to score this weekend on Sunday, even though it's Wednesday now. This is going to be an interesting one to score because if we're just scoring objectively, that did surpass and give enough of a bullish indication for that a low was established. That low was higher than the previous low. So technically, I would think that's a minus 0.25 for that, like a demerit. You get a demerit. Um, but then if we did establish that low today, we broke it, which would be a 0.25. And then we broke this one, another 0.25. And we're down here. The next low there. So this is great. It's just so reactive to news, right? That's it was so much behind a binary, potentially binary. And like I said, whatever we got with as the bullish reaction, if let's say Pakistan had not been as effective in its communications as it seems to have been, it seems to me both sides credit um, intervention from them. If there was an escalation in rhetoric, if we hit that deadline and instead of a mutually agreed upon ceasefire, we had an attack or an escalation of attacks even. Yeah, 100%. Instead of a 2.5% jump, 3%, 3.5% to the downside. We still do not know what the 10-point plan says. Yeah, so we have a 15-point plan and they have a 10-point plan. Is that right? That was my understanding. Yeah, no, I agree. I agree. But I think two things. Number one, my understanding is that as they immediately open traffic in the strait, they're also going to start charging for passage, and use the money for country reparations. And there's a lot to rebuild, and I think that maybe that like the combination of those two things means they'll be like, yeah, no, we kind of want to have this tool. I don't know. We'll see what those 2 weeks bring. Trump essentially agreed that their 10-point plan would be the starting ground for negotiations. Oh, okay. So they'll start there and then they'll find that the 5 points in between is where there's miles of distance. I don't know. Yeah, so this is favorable overall. This will bump. Oftentimes on Wednesday we check in. Have they always charged for passage? Not that's not my understanding. Um I that's I don't think so, but someone else who knows more weigh in. Hmm. The boss says no. Okay. Improving on the VIX. Let's look at the SPY again as we see this thing establishing. So we're 16 minutes in. We're not seeing a lot of follow through, which is fine. It's just it's not like we got the news we said we'd like to be ready for the opportunity if there's an opportunity, but um, um, is it setting up where we're looking at this saying, okay, if this pulls back, then we look for our chance for the buyers, maybe on the day trade level, but on the any kind of momentum level, what I want you to notice across our levels, this was a pretty instrumental level as the market started to top one, two, three. And if we extend this line across, you can see that's in my opinion, two things happen there. Number one, it does complete the V, which if we start here, and again, I want you to notice how it actually got the upside of the V faster than the downside of the V. I want you to remember when we said things like, if this is a V, you have to put trades on right now. And at the time, it's hard to feel very bullish where you're like, yeah, here's a great bullish trade I want to put on. But if you want to be participating, otherwise you'll end up spectating because that's how fast it can be. And now the thought is, well, in order to make this trade, you'd have to think it's going to go on up to the if our risk was within our means, as we talked yesterday, we could have put a call in the money if it gapped up risk reward. Yeah, I mean, again, yes. If and I would say more than just if our risk was within our means, that's obviously true. Of course, every trade we take should have the risk determined, position size, and established within the means of your trade risk rule. We'll be there in a couple weeks. Those of you who are newer, to work on things like trade risk, number of trades, portfolio heat, and how those things fluctuate as directly correlated with market posture. Our I would say our, because I've been asking for. I mean, it's been. Let's go see. And I don't have it. Damn it! Sorry, guys. Something happened where I lost. I have to like send the file from my other computer and update it. It didn't save right. Strangely, it's very frustrating. Okay. But our posture began declining. Let me see if I have it up here real fast. Around the beginning of February. So in this area here, we're like, whoa, this thing could be, you know, and so what's happening is my number of trades is going from, you know, whatever it is, 10 or 12 down to 6 or 8 down to 3 or 4. So my risk is going from where I'm willing to be 12 to 15% risk to 8 to 10% risk to 4 to 5% risk. Where it's like, hey, you know what? I'm in this market. I don't see this as this is the market where I'm going to go out and smash a bunch of trades. Doug, that's exactly my premise. And what I'm saying is, I think it would have even been worse. But what I'm saying is, if we got 2.5 to the upside, I think it would have been 3 or 4% to the downside, which, in my opinion, made it very difficult for a reward to risk to work out. So, Stephen, I'm not saying you did something wrong. If you found but for me, any circumstance I looked at and I said, hey, if we gap down 3 or 4%, what's going to happen to this? It's pretty catastrophic. If you buy a call today and tomorrow the market drops 3 or 4% on bad news, it's like that's a gut punch. And that's where I'm saying I feel like putting a trade on yesterday would have been a very difficult circumstance to say, I think this has favorable reward to risk. I mean, I don't know. Maybe was it a coin toss? Do we think that we went into yesterday's probabilities of a ceasefire versus an attack at 50-50? I don't know. I didn't feel like I had a strong pull one way or the other. Did you guys feel like you were biased? A few people mentioned the potential for a taco, and the taco tends to really lead bullish. That's what happened. Bit Boss mentioned that. Anyways, we have to analyze the situation and vibe. And be willing. Sorry, I thought you put vibe. And be willing to make a call for the. Agreed. I mean, yeah. You're basically saying, if I do this, where am I right? How much do I make? Where am I wrong? How much do I lose? And what's the probability of success? Those are our right. Those are the three core variables. It's the same thing that goes into our expectancy, right? Risk to reward, probability of success. It's the same thing that goes into um our Kelly criteria that helps us to determine risk. So yeah, no, this is and here's the deal, Stephen D. Um, I think I even said this yesterday, where it's like, hey, if you have it and you put a trade on now, if you're like, I'm gonna load up on 8 different trades across different sectors for this event, that's where you're starting to be like, hey, that would have put your portfolio at significant risk for bad news. If you had 1 or 2 trades on, like one new trade, one you were carrying, and then you had a put trade on the other side, that's a balanced that's a balanced play. Um, I wanted to go. Tell me about and let me know how everybody did with this. Balanced meaning going into yesterday, my intent was to carry an equal number, 2 calls, 2 puts, right? Two if I have so if I only had if I had 2 put trades on and a call trade on, I probably actually would have gotten another call trade in place. For what? The balance. Because my thought is if the market knows that I have 2 puts and a call, it's going to rally and I'm going to be ill prepared. I'm going to have one call that's trying to recover while I'm fighting losses on the other two. And maybe I come out near break even, maybe slightly underwater. Um uh right? Or and if it's the other way, same kind of a thing. So my intent is balance when I have something like that. I'm still what I would consider to be in the bearish end of neutral of my market posture. I'm not My posture is not a bearish. It's negative, but it's not bearish. It's neutral, minus 2.5 to positive 2.5. That's kind of my neutral. It is the bearish end of neutral, but still neutral. So neutral to me means I'm kind of open either way. Now, here's the deal. As you can see, even now, what's happening? We're 30 minutes in. We're 30 minutes in, and we had 3 sells and then a buy. So here's our opening range. And you can see that the sellers broke that initial opening range to the downside. Uh, yeah, we could see this thing give back 1% from the open. it would still be a positive 1.5% day, but very much we could see the momentum negative. That we might have that initial overnight reaction, which may have been an overreaction, may be it. But what else happens here? Let's go back to thinking about our posture. Yeah, this is definitely going to get. This is definitely going to get a bump. We broke to the upside, so at least a quarter, maybe a half a point on the short term to reward the buyers for their bravery on this, like a medal. Clearly, that is, if you look on 6 months, this one's probably the same size, but took a little longer. Maybe it's not the same size. Maybe it's a little smaller still. This one that looks a little smaller as well. I think that what we just saw over the last 1, 2, 3, 4, 5, 6 days was the biggest 6 days in the last 6 months. And it kind of sneaks up on you because you're like, wait, what? We were really starting to think about this bearish orientation. Well, yeah, because other than what just happened, as we said, 6 more weeks, and we're pretty much at 6 weeks in a couple of days, I believe. 31 days in March, 8 more, 39, 40. Yeah, 2 days, 6 weeks. If those ships didn't open up and start, oil was heading to 170, which, as we said, could in and of itself create global recession conditions. So this is pretty substantial, and the market responded as such. Steve said, for me, I was not willing to take the risk. However, if I can make a bear call spread or bull credit spread to my advantage, I will take that risk. I did that with silver and gold. Yeah, that's fair. I mean, the hard thing is, like, if you had a credit spread, imagine if you had a bearish spread that was sitting up here at 680. You put it on when it was at 660 and it rolled over, right? It rolled over, and you put on a credit spread up here, and you're thinking it drops down and you're just doing amazing. And then the next day it pops back up and you're like, oh, well, I'm still so far away. And then, it's kind of moving up and you're like, oh, it's okay. It's still so far away. And then all of a sudden, you wouldn't think to yourself, boy, you better close that thing. And then today, now it's inches away, right? Inches away. And you're starting to, and as I say this, some of you have maybe experienced this. I can tell you I've experienced this many times. Right? Of course it's happened. And then you're like, well, now what? And then you're thinking, well, if I close it now and all of a sudden this thing just kind of dials back, I'll tell you that this V pattern is extraordinarily strong. I told you I was going to correlate this. Let's go back in our Wayback Machine. I think we can just do it in a year right now, actually, still. No, we need a little more. Let's go 2 years. And interestingly, our market posture over here only got down to a minus 2.75. Whoops, minus 2.75. Minus 2.75. And then you can see it did its initial pop, pulled back, higher low, and that right there was a great opportunity, and that's when it completed its V. So it took a little longer. It got a piece of it back very quickly, then it dropped, and then it finished it. And then from there, we got this market. Great. It was great trading. We recovered very quickly. By June, I think we were back to like a 4 or 5. And are you asking, are you thinking, oh, are we waiting until then? No, we're trading back there at that first, not the first arrow at the bottom, but the second one. But we might only be doing, 3 or 4 positions there, and then by the time it gets over here, we're getting a few more, and then over here we're up to, this thing is moving, and by the time we get the best part of this, we've opened up our risk in order to really come in and capitalize. And then, it gets a little tougher. And then our posture really starts to drop and slow down. And we start to dial back the number of trades, the amount of risk that we're willing to take, so that if and when we get the next one of these like this, and we don't know, I mean, we're not like, oh, this is going to now do the exact same thing. We don't know that. We're saying that there's some correlation. I mean, interestingly, like what we're feeling right now is actually quite small compared to that one. And we got down to a minus 2.25 over here. So the sentiment is a little bit more spooked, even though, this actually feels more like that first leg over here. And then it got a little worse still. And you'll notice that, let me turn this red because I know it's starting to get ugly. I'm back there in the middle of the chart. There was a little pop, right? Whoops. I tried to draw an arrow down. There was a little pop. That's exactly what we were looking at now. And the question is, has today changed what we think about that? Does this thing fall back down into this range? I don't know. I think it's still a bit of no man's land. Recoveries and these types of volatilities are tougher. Part of what you learn. So a lot of people think, oh, I should be learning to like get in and out to the downside, but also to the sideways. Actually, I would say the best thing that you learn is in these situations is patience. Because when you get a chance to go back and look, and I want you to notice, whoops, I'm going to move my drawing tool panel. If you look, let's make it green. No, let's make it purple. This market all the way to the left, it's hard for my lines to show up back there, but we had a very bullish market back here. Our market posture during that time was probably probably an average of like a 4 to a 6. There was one little period. You can see there was a consolidation period around this July, August area. That's we want to have a pragmatic look at what we expect trading to be. We expect to do well when the condition. This is what I mean when I would tell you when I would have trading conversations with individual traders when I would coach one-on-one, and I'd be asking them about like, hey, what have you done? When they would start to be like, oh, when I first started, it was this, and then I feel like I started to get it, and I was doing better, and then this happened. And they're looking at it as this is the result of their educational journey. They learned something and then they started doing better. And I'm like, I wish, I wish that was the case. But actually what's happening is your results are representative of what the market did at that time, most of the time. If you're new, our group name shifted. We used to actually be called the Market Watch Group. It's our first Market Watch Group, because what do? We watch the market, and if we get the market right, everything else is easy. If you understand the market and you understand, then you're going to understand how much, where, what strategies, how tight or how loose. I mean, there's so many things that we get as a direct result. But right now, we have a 2.5% gap up in a market that currently scores minus 2.25. What, like 100% directly correlated to news that was announced overnight. If you're looking at that and you're like, oh, I should have done, stop. Yeah, just stop. There's nothing you should have done. I mean, I hope you hear me saying, like this is the kind of market where we want to. Goodness, mm. This is the kind of market where we want to, give ourselves latitude, give yourself some grace to, um, you know, don't be hard on yourself. Learn lessons quickly. It's I don't know. Questions, comments. How's everybody feeling? This market. We said let's be ready. I think we were ready. If there was something that we were going to trade, let's get rid of all these drawings. I mean, you can see what's happening here. Feeling much better at this time. Love it. I got to tell you, whenever I see the market posture look to improve, I'm always excited. Like I would love to see us get a point back and then get a second point back. If I see those 2 weeks in a row, that alone will have me starting to accelerate my bullishness. And my score would still technically be minus 0.25 or zero. Um, Somewhere in that range. Excited too. Looking forward to being brilliant again. I love it. Sandy's making a great reference to the old saying, everybody's a genius in a bull market. that's that is the crux. That saying led to my book idea. It's a work in progress. Titled "Find a Bull Market by the Dips." Okay, cautiously optimistic. That's a good one. That's a good one. Like, hey, we're hoping that we can come out of this. Let's see what comes. All right, let's go talk about what's happening here. Where's the red? Alcoa. Alcoa. Now, here's the hard thing. Alcoa, which is interesting, when I first got into trading in the early 2000s, uh, Alcoa was my earnings beacon. So when I would be like, oh, feels like we're getting close to earnings season, I would pull up this one. It's alphabetically double A, the first Dow component. I'm pretty sure it's still a Dow component. Used to be. And that would be like the kickoff. But what's actually happened over the years, over the last 10 to 15 years, is financials have like shifted into like first position. So wherever Alcoa is, you're going to find that like it's fun purpley color. If I go through and look at some financial stocks, let's go to Bank of America. You can see there's their earnings right in this range. Citigroup at the beginning of this range. So Alcoa was, I guess I was a little past it. They were here, but you can see, Citi's over here. If we look at Goldman Sachs, Goldman's the first one. They're over here, 413. And Morgan Stanley. So Alcoa, major financials, those are now our earnings kickoff. So that's what's happening starting next week. So why am I saying that? Because this is on my bullish list. It just made a new high. And if this were to pull back to 65, stabilize, and turn, I'd be interested in it, unless it only has a couple of days before earnings. So it's like, ooh, I don't know if we're gonna have time for this. Apple, good day today. It's up almost exactly like the market itself. Um so where when the market rallies today, what's getting hit? All our bulls that we were watching, not bulls like that we're in. We were looking at these saying, hey, these are the stocks still making higher highs. As they pull back, if the market comes to if the buyers don't last very long, some of these things might become where our opportunities are. There's one that was just kind of doing its thing, and then all of a sudden, bang. So we manage through it, saying to ourselves, a lot of stuff's dropping, and this thing is still holding on. AMKR rally, Amazon rally, but you can see some of them are already pulling back. Already pulling back. ASX holding on, looks pretty good. AXP, yeah, we're definitely seeing some breakouts. Baba, Bank of America. Now we already had a theory about some of these. That's not a good color. I need to go back to red. Some of these financials, but it's the same problem. By the time we see a little consolidation that leads us into trading, we run into this earnings and you have to decide. Now, you might say, you know what? I think earnings are going to be good. I'm willing to do it. Okay, great. Yeah, eyes wide open. That's all we're asking, right? Um, uh, so, um, let's see. BCS. Yeah, obviously a lot of gap ups. Look at City all the way back up to its old high. That was one that I said I liked. Um, Coming up on earnings now. Caterpillar, CF. So we are seeing, what are we seeing? Things like staples pulling back, things like technology rallying. That's going to help us in our sector rotation. That's also going to help us in our that's also going to help us in our major market analysis. That's going to, let's see, our VIX rising. I think we could get, depending on the next couple of days, unless we have like a real strange broad sell off. Um, it could be a nice recovery this week. Let's see, Coherent, Cisco. Ooh, Cisco is one we liked. Delta gapped up on earnings. Dow's up almost 3. Dow, and there's Dow Chemical, right? There's Dow Chemical. Now I'm okay with that. It got there faster than last time. Last time it pulled back like this, but if this thing stabilizes over here and then starts to turn, and then all of a sudden we have some more uncertainty on the market as we get closer to that 2 week deadline, we're going to want to have some of these defensive defensively oriented stocks lined up. Um, Let's see. Arrow. Let's see how it looks for you. ERO, Arrow Copper. Nice. Yeah, that had some momentum already. Nice little pop. Very nice. Okay. Ford. NASA. Absolutely. NASA. Tell me what you've got there. You're in it. You're thinking about it. Team of Space Innovators in. Ooh, okay. So a little IPO action. Very nice. So this looks like it IPO'd on um let's see. Um IPO'd, rallied, rallied, paused, rallied with a pullback. Yeah, I mean it's so hard with IPOs because we just don't have a lot of, as market technicians, we're looking back just sort of like almost uncomfortable that we don't have like, oh, I want to find support and resistance. And it's like, um, so it's an ETF, still IPO'd as an ETF. What are the primary components? Do you know like what the top three holdings are by chance? That's in a circumstance like this, when you just only have 7 days to look at for this one, I would go look at the top three to just kind of get a sense of um what the top three holdings look like. I'll show you how you could do this real fast. This might be something others would want to do. So if I go to NASA here, and then I go to profile. Oh, it's so new. Events, statistics, summary. Maybe it's under summary. Um, okay. It's not even established enough here. Let's see. Top three holdings for a stock. Whoops, stock. Terma. Yeah, but what are the holdings? Here we go. Holdings. Space XPV, but that's not publicly traded, right? I don't think either of the Rocket Lab, but I don't know about AST and SpaceX. It seems like that's like some private, I don't know. Okay. Yeah, that's a tough one because it's just Lunar. Is Lunar in that group? Maybe it's like one of the holdings, but further down. Lunar. There you go. Okay. Interesting. All right, where were we? Home Depot. Oh no, let's see. Google had a good move. Goldman almost to earnings. Home Depot. A lot of pops. Then we'll see what comes next. Oh, look at Intel. There's something about it. I was like, I like it, but then I'm like, this thing's just going sideways, sideways. So there wasn't really a lot behind it, to be fair. Okay, let's see. IWM. Lumentum. LRCX. Lam Research made a big one up 10% today. MasterCard. Meta's getting a good recovery here. Let's see. Monster Beverage. We're gonna have to start getting some new lists as we if and as we come out of this. Microsoft, Micron trying to pop. Netflix struggling. Nvidia trying. Palantir. Ooh, Palantir. Look at that. Palantir's already back down 2%. Okay. Here's the Qs. What are we at? Two, almost three, but giving back some still. Rocket Lab. Ross Stores looks okay. Rocket RTX strong. Oh, silver was up 10% today. Oh no, that's SanDisk. I skipped silver. I'm like, wait, how is that possible? Silver's up 5% today. SanDisk is up 10% today. That made a good strong move. SPY. Let's go look at the intraday and just kind of see what's going on there. Just kind of trying to feel it out. Yeah, trying to feel it out. STX, nice strong move today, up 6.5. Let's go back out to here. Yeah, I don't know. We'll see what comes next. Ooh, that's why. Even though the market's looking better, this thing's still looking pretty bearish to me. Struggling coming out of this new acquisition that it made. The market is not very appreciative of it. TJX, Tesla. Tesla's still struggling on its downward move here, despite the market looking better. Looks like another manipulation. Yeah, it's it doesn't seem to have a lot of uh legs behind it as of this point. Um so we'll see. UPS this one is where I'll be taking my loss. It had not broken support. It went the right way. Luckily, I took a piece off when it hit its first target. Then it reversed, tested, started to try, and then that's the end of the road. I think it may end up a break even if I look at the loss plus the gain. And that's sometimes what happens in this type of a market, right? You're it's a dogfight all the time. something that we just need to be aware of. Okay. Um, Questions before we wrap it up? In a Tesla put since 3:30, that's a good one. Yeah. Yeah, Tesla's been on a downward since 3:30. Nice. Very nice. um okay. Well, we got the news. We're now watching the reaction. Um we will go from there and see what we think. Glenn will be here tomorrow. We will meet tomorrow evening as well. Patience, patience. There's nothing that you should be hurrying to do. That's the bottom line about this market. Thanks, everybody. Have a great rest of your day. As always, happy trading.